Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo, so you don't have to. Today we're diving into Sierra Bancorp's latest report, and let's just say they're giving us a peek behind the curtain on July 28, 2025. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can join the conversation. So what exactly is this report all about? Well, it's a Form 8K, which is like a current event bulletin for companies. It tells us about important stuff that happens outside of the regular reporting schedule. In this case, Sierra Bancorp is letting us know about their financial results for the 3 and 6 month periods that ended on June 30, 2020. Now, before we get into the nitty-gritty of their performance, let's quickly confirm what we're dealing with. Sierra Bancorp's common stock is traded on the Nasdaq Global Select Market under the ticker symbol BSRR. This tells us they're a publicly traded company and we're looking at their official financial story. The main event here is the release of their financial results. It's like getting a report card for the first half of the year. Companies use these reports to tell investors how they're doing, whether they're making more money or less, and what challenges they might be facing. It's all about transparency, or at least that's the idea. This is the core of the filing, folks. Sierra Bancorp released their financial results for the first half of 2025. This isn't their full audited annual report. These are unaudited results for a specific period, meaning they haven't gone through the most rigorous audit process yet, but they give us a good snapshot of how the company is performing. This section is all about the supporting documents. They're telling us that the exhibits, which are basically the attachments to this report, contain the important information. The big one here is Exhibit 99.1, which is that press release we've been talking about. They're also including something called Cover Page Interactive Data File, which is basically a digital package of information for easier analysis. So the press releases are key. It's where the numbers in the story are. Think of it as the company's official statement about their financial health. This is where we'll find the juicy details about their revenue, profits, and whatever else they want to highlight. It's crucial to remember that this information is furnished, meaning it's provided to the SEC, but it's not technically filed in the same way as other documents. This means they're not taking on liability for it in the same way, which is a subtle but important legal distinction. While this filing doesn't contain detailed financial tables directly within the 8K itself, it points us to the press release, which has those key figures. Based on the typical structure of such filings and the information provided, we can infer that the press release contains the unaudited, consolidated financial results. For a company like Sierra Bancorp, a regional bank, we'd be looking for things like net income, earnings per share, loan growth, deposit trends, and perhaps the efficiency ratio, which tells us how well they're managing their operating costs. Let's imagine hypothetically that the press release states their net income for the 6 month period was $50 million. If the previous year's income for the same period was $40 million, that's a 25% increase. That sounds good, right? But we need to understand what drove it. Was it just more customers, or did they make more money off each customer? Perhaps it was due to a decrease in loan loss provisions, meaning they felt more confident about their borrowers paying back loans. This could signal a strengthening economy in their operating region, or it could mean they're taking on more risk. Another important number to watch is their loan portfolio quality. If their non-performing loans, which are loans that borrowers are struggling to pay back, have increased even if net income looks good, it could be a sign of underlying weakness. A significant increase in non-performing loans could mean higher future losses, which would eat into profits down the line. For instance, if non-performing loans jump from 0.5% of the total loan portfolio to 1.5%, that's a threefold increase, and definitely something to pay attention to. It might mean they're loosening their lending standards to boost loan volume, which can be a risky strategy. We also want to see how their deposits are performing. Deposits are essentially the raw material for a bank. If their total deposits have grown, especially low-cost checking and savings accounts, it's a positive sign. It means customers trust them and are keeping their money there. If deposits have shrunk, or if they're relying more on expensive sources of funding like borrowing from other banks, that could put pressure on their profit margins. A 5% drop in total deposits might not sound huge, but if it's coupled with an increase in the cost of borrowing, their profitability could take a hit. It's like a restaurant seeing fewer customers and having to pay more for their ingredients. When we look at a bank's performance, we often compare it to its peers in the same region or similar sized banks. If Sierra Bancorp is growing faster or is more profitable than others, it suggests they're doing something right. Maybe they have a better market position or more effective strategies. Conversely, if they're lagging behind, it prompts us to ask why. Are they struggling with competition? Are their strategies outdated, or is their management team not executing effectively? It's about understanding if their performance is a result of solid business practices or just favorable external conditions. Now, looking at these results more broadly, Sierra Bancorp appears to be navigating the current economic landscape. Their focus on announcing these results signals an active engagement with the market. However, without the actual numbers from the press release, it's hard to give a definitive assessment of their direction. We'd need to see the specific figures for revenue, profit, and key banking metrics to truly understand their strengths and weaknesses. A notable risk for any bank, including Sierra Bancorp, is interest rate sensitivity. If interest rates rise rapidly, the value of their existing fixed rate loans can decrease, and the cost of their funding can increase. Conversely, if rates fall, their net interest margin, the difference between what they earn on loans and what they pay on deposits, could shrink. Another opportunity might lie in expanding their digital services or catering to specific niche markets within California where they operate. In conclusion, this 8K filing is essentially a notification that Sierra Bancorp has released its latest financial performance report. The real story lies within that press release. To get a true picture, we need to analyze those specific numbers for earnings, loan growth, deposit trends, and asset quality, and then contextualize them against industry benchmarks and the broader economic environment. Alright, that's our breakdown of Sierra Bancorp's latest filing update. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.